It's been a difficult start to the week for global equity markets as trade war concerns have shaken investors, causing markets across the globe to stumble on the opening couple of days of the week. The biggest beneficiary in moments like these, though, is the safe havens, and gold is one of those. Gold has moved from the lower end of its recent ranges back up towards $1,480. Now, $1,480 has long been an interesting level for the yellow metal, not just since we broke below this level a few weeks ago, but prior to this it was seen as a key level of support, and that is the most important thing here. Quite often when we do have areas acting as major levels of support or resistance, when we do see those areas eventually break, that also flips on its head as well. So prior to the break lower that we saw previously, 1480 was a massive level of support. Everyone was talking about this as being a major level of support that, if broken, would potentially suggest that the gold is headed into a new bearish pattern, or at least a more corrective pattern following a strong bullish one over the course of the summer. When that did eventually materialize, we were trading back around the kind of 1440 to 1450 levels. Again, historically, a very interesting level. From here, we've tested $1,480 on a couple of occasions, the latest of which has come this week during those more risk-off markets that we were seeing on Monday and Tuesday. But once again, over the last 24 hours, these two tests that we've seen around this level have run into significant resistance. And the latest of this has come today. We actually breached 1480 just briefly before rotating downwards, but unless we see a close above here, then that is just going to reinforce the belief that 1480 is a major area of resistance. Now, if we do break above here, then 1520 above is the next notable level. Prior to breaking below 1480 last month, 1520 was an important level of resistance, tested on multiple occasions, but failing to break. So that becomes the next area of technical resistance above. If we do continue to hold below 1480, though, again, that does reinforce it as a major level of resistance. Now, if we look at the broader trend that we have seen in gold, this has been a little bit more bearish. One of the reasons why it's been more bearish is because so many central banks have already imposed easing that we were expecting them to do. The Fed has cut interest rates on 3 occasions. The Reserve Bank of Australia has cut interest rates on a few occasions. The Reserve Bank of New Zealand also, and the ECB has cut interest rates to minus 0.5%, but also restarted quantitative easing with 20 billion euros of purchases each month. All of this has been enacted, which means there's very little left to be priced in the near term. That's why we saw the strong rally over the course of the summer in gold, and that's why we're now seeing it pair off. And there's been a strong belief that we are actually going to see gold continue to pair off, potentially back towards the $1,400. Major support exists, as I've already said, between between 1440 and 1450. If we do hold around 1480 right now and 1440 does break over the next few weeks, then 1400 becomes that next major area of support. A break of here would be a big psychological break, with it being a major round number, and would suggest we're going to see a much stronger correction in the gold market. If we hold over 1400, though, then this does still continue to represent in the near term a broader correction from that strong summer rally where it started around $1,300, ended around 1550. So gold is in a very interesting period right now. A break of 1480 suggests that we are back in more bullish territory, with 1520 representing major resistance above that. A hold at 1480 draws attention back to 1440, and again below that around $1,400. But ultimately, all of this could hang on the trade war. Traders have really grasped to any headlines which we're getting, and we are getting plenty of them, whether it's from President Trump's Twitter account, whether it's from White House leaks, or whether it's from the Chinese media. People are gripped to the trade war right now, and that is really driving sentiment in the markets, and therefore driving demand for safe haven gold.